Hello, my name is Tammy Huang, QuickBooks Pro Advisor focused on construction cost accounting. Today I'm going to talk about underbilling and how contractors can avoid it. Let's get started. So what is underbilling? Underbilling is our current asset because we have worked so hard on the job, yet we don't bill our client enough. Eventually, we don't collect enough money. We are short in cash. So basically, underbilling is we are not billing enough in a period of time. Let's get an example. So our contract is 100%. As of March 2020, we completed the 30% of the project, yet we only billed 20% of overall the project. Apparently, we're 10% short on our billing. That's called underbilling. Simple like that. So why does that happen? In construction, we have change order. We did not get approved for our change orders. That's number one. Number two, we underestimated the project cost. Well, originally, we think that this project gonna be simple. This kitchen take about $10K to build this kitchen. However, we need to hire more worker, we need to order more material. So the estimated was not correct anymore. We now need $14K to complete this kitchen. We are underbilling. That's the second scenario. So the third scenario is we don't bill on time. We don't invoice the customer on time. So time is money. Accountant, we need to bill on time. We need to be on it, and we need to remind our customer, hey, we don't get paid yet. Can you please pay us? Okay? Also, the next one would be the time and the material on the contract. Work that's already started but is not billed until the work is completed. For some small job, for example, we sometimes have to promise a client that, hey, I'll finish this job, but it's okay not to get paid until the end of it. It's not a good thing to promise such thing, but sometimes we kind of have to just to get small work in place maybe. And for that period that we don't get pay until the work is completed, that's underbilling. Or sometimes we pay our subcontractor ahead of time, yet the job has not finished yet. We already pay our subcontractors, so we eat that cost ahead of time. That causes underbilling. There are a couple simple, added and minus. What's the word for it? There's a couple scenario here, calculation. There's a couple calculations we can put together to determine, are we underbilling or are we overbilling? Of course, you have to back it up with all the number of accounting that put in place already to come up with this number. So we're going to need to calculate the percentage of completion. We will take the actual cost over estimated cost. Actual cost is what the vendor billed us. Total it up over the estimated cost, will come up with the estimate with percentage of completion. That's first thing. The second thing, we're going to need to calculate revenue earned. Revenue earned calculated by percentage of completion times estimated revenue. So we're going to come up with the revenue earned, this number. We're going to minus that to the actual revenue, and we're going to come up with a number. If that number is positive, we are underbilled. If that number is negative, we overbill. Okay? So there's a lot of things going on, but let's get into an example so to make it simple for you. So we have this customer called CDG Entertainment, and we're gonna build this job. We estimated the cost to complete this job is $350K. We think we're gonna have revenue of $455,000. And we're gonna build this for the period of March 2020. The total bill that we receive is $135 roughly, and we agreed that we're gonna progress invoice for this period at 30% progress invoice. Okay, so using our calculation, we're gonna get the percentage of completion. We take 135. This is an actual cost over the estimated cost to come up with this percentage. So we are thinking at this period we should have completed about 38%, this much. Okay, and with this 38.7%, we should have earned roughly about $176,000. Okay. However, when we progress invoice our client at 30%, it's come out to be about $136K. So this is the amount we're supposed to get minus the amount that we got. We're gonna come up with about $39,000. It is a positive number. So because it's a positive number, we actually underbill our client. So we might want to talk with our client about, hey, we need to bill you for this X amount, or can we hurry up and bill for the next progress invoice so we don't continue with this underbilling, time frame. So how can contractors avoid this situation? There's multiple things you can do to avoid this underbilling. After all, you cannot agree on the change order. You cannot work on the change order until you get that approved already. Okay, and you have to improve on your cost estimating. With a good accounting system, you can do forecasting. You can estimate it. You will get better at estimating your project, so you don't underestimate your project. And also, good accounting system in place, you will create invoice ahead of time. You can remind the client. You can pretty much be on top of your invoicing. Okay. Also, we don't agree to pay our vendor until all the tasks are complete. Okay. Double check on the vendor, because vendor often will also want to get their bill paid as well, but job not necessarily completed yet. So double check on the job, make sure it's completed before we pay our vendor. That there is in some billing period, the contractor must be underbilled. Like an example earlier I said, so maybe this month we underbill a little bit, but then the next month vendor often will also want to get their bill paid as well, but job not necessarily completed yet. So double check on the job, make sure it's completed before we pay our vendor. When we have our next progress invoice, we're gonna overbill for next period. So in construction, there might be some underbilling period for a short period of time, but it shouldn't be repeated all the time, and it could be avoided if we have all this workflow in place. So I hope this helped, and thank you for watching. My name is Tammy, QuickBooks Pro Advisor, specialized in construction cost accounting. Thank you so much.